Hello everyone, today we will discuss another topic in the banking and insurance law. Today we will discuss about another kinds of bank insurance, that is property and fire insurance. We have already discussed other types of insurance, and today we will cover property and fire insurance. The list of topics to be covered here is introduction. Then we will first discuss about property insurance. There are different types of property, and so different types of insurance are there. For example, commercial property insurance and non-commercial property insurance. Then there are certain major hazards which are related to this particular property insurance. Then we will cover the fire insurance, type of losses under fire insurance, and what are the conditions applicable under fire insurance. As we have already discussed, an insurance contract is an agreement that evidences the contractual obligations between two parties. That is, first is the insured, that is the policyholder, and the insurer, which is the insurance company. In exchange for a premium, the insurer agrees to compensate the other party in the event that it sustains a loss or damage within a specified period of time. So we can say that insurance is a contract where one party agrees to protect another other party from sustaining a loss or a damage only in exchange for a premium and within a certain period of time. Let's start with property insurance. Property, from a literal point of view, refers to anything that a person or business has a legitimate claim over. A legitimate claim over a property gives the owner of such property rights to its usage. Usually, property has a financial value attached to it. In the event of loss or damage to such property, the owner could stand to lose out. And to insure the owner against the risk of such loss or damage is what property insurance is all about. There are different types of property. Basically, there are two categories under which the property falls. First is tangible property such as building, furniture, cars, and money, and another one is intangible property such as knowledge or intellect. Depending on who the owner of the property is, individual or business, the tangible property can further be subdivided into commercial property and non-commercial property. And currently, insurance companies provide insurance only for these two types of property, commercial property and non-commercial property. Non-commercial property insurance. Non-commercial property insurance involves insurance covers tailored to meet the needs of individual property owners rather than business. The type of non-commercial property includes home or house owners insurance, private motor vehicle insurance. Now, commercial property insurance. Commercial property insurance includes products that are tailored to meet the needs of business and include the following: fire and allied perils insurance, asset all risk and industrial all risk insurance, business interruption, engineering covers such as contractors all risk, erection all risk, machinery breakdown, loss of profit, boiler and pressure vessels, deterioration of stock, contractors, plants and machinery, standalone terrorism and sabotage. Major hazards. In property insurance, the danger and hazards that are attributable to losses are quite many, such as a property can be destroyed by fire, explosion, lightning, certain windstorms, earthquakes, and floods. There are certain natural calamities which are majorly caused for the destruction of properties, and these are the dangers which are attributable to losses for property. Now let's discuss about fire insurance. A fire insurance is a contract under which the insurer, in return for a consideration premium, agrees to indemnify the insured for the financial loss which the latter may suffer due to the destruction of or damage to the property or goods caused by fire during a specified period of time. It means that fire insurance is also a contract where insurer, that is the insurance company, collects premium amount as a consideration and agrees to protect the insured, that is the policy holder, from suffering any financial loss in case of destruction or damage to his property or goods only if the cause of the damage or destruction is fire during a specified period of time. The contract specifies the maximum amount agreed to by the parties at the time of the contract, which the insured can claim in case of loss. This amount is not, however, the measure of the loss. The loss can be ascertained only after the fire has occurred. The insurer is liable to make good the actual amount of loss not exceeding the maximum amount fixed under the policy. A fire insurance policy cannot be assigned without the permission of the insurer because the insured must have insurable interest in the property at the time of contract as well as at the time of loss. The insurable interest in goods or property may arise out on the account of first is ownership, second is possession, third is contract. A person with a limited interest in a property or goods may insure them to cover not only his own interest but also the interest of others in them. Under fire insurance, the following persons may have insurable interest in the subject matter, that is the property. First person who has insurable interest in the property is the owner of the property, then the mortgagee of the property, pawnbroker, official receiver or assignee in insolvency proceedings, warehouse keeper in the goods of customer, a person who is in lawful possession, that is a common carrier, wharfing or commission agent. These are the people who have insurable interest in the subject matter, that is property, under the fire insurance contracts. Now, there are certain types of losses which are covered by the fire insurance are goods spoiled or property damaged by water used to extinguish the fire, pulling down of adjacent premises by the fire brigade in order to prevent the progress of flame, breakage of goods in the process of their removal from the building where the fire is raging, etc. Example, damage caused by throwing the furniture out of the window, wages paid to person employed for extinguishing the fire. There are certain conditions which are applicable to the fire insurance, such as a claim for loss by fire must satisfy these following conditions. The loss must be caused by actual fire or ignition and not just by high temperature. The proximate cause of loss should be fire. The loss or damage must relate to subject matter of policy. The ignition must be either of the goods or of the premises where goods are kept. The fire must be accidental, not intentional. If the fire is caused through a malicious or deliberate act of the insured or his agents, the insurer will not be able to will not be liable for the loss to the insured of the property.